Welcome back to Crypto Meets AI. Jerry here with an update for you. Do me a favor, friends. Smash that like button, hit subscribe, and comment down below. It really helps with the algorithm. Now let's get into this. We're sitting at $3.09. We're down about 1.5% on the day. Still trading sideways in that range of 301 to 315. And they'll likely drag the case out until November. I think they want to delay it until utility market happens. It's the perfect excuse to keep retail attention on BTC and ETH. They know how big XRP will be, and that's why they're delaying the end of the case. And 42 banks opposed Ripple's federal license bid over regulatory clarity and 2.5-week review concerns. Yet XRP's trajectory remains strong as Ripple advances toward full regulatory alignment and deeper integration into the U.S. financial infrastructure. They're going to fight this big time because they know once this happens, honestly, there won't be no reason for the old traditional style bank. That's why they're all jumping on board with blockchain technology. And I don't have the numbers in front of me, but I'm pretty sure XRP's use as a bridge in Ripple payments dwarfs every other asset. I think stablecoins win for collateral use cases and edge use cases. For everything else, I still think digital assets work better. Unless your risk is adverse, you'd probably prefer to hold most top-tier digital assets over cash. I also think that more use of XRPL for real financial use cases will translate to more utility and value for XRP. XRP has a privileged place on the XRP ledger and is not likely to get worked around as, say, ETH has been in the past. And the golden age of crypto just went official. The White House says DeFi is entering mainstream finance. Guess which asset already partners with 300 plus banks, is already ISO 222 ready, and already used for cross-border payments. The golden age of XRP starts now. And the Scotland meeting just changed everything, and nobody saw this coming. Trump-von der Leyen announced a 15% tariff deal, but that was just a cover story. The real deal was never about tariffs. Since the media won't tell you, here's the real breakthrough. Everyone's talking about the 15% tariff rate, but they're missing the massive shift happening behind the scenes. This wasn't about avoiding a trade war, it was about engineering the largest investment commitment in modern history. Here's what actually happened at Turnberry. Europe agreed to spend $1.4 trillion with America over the next 3 years, $750 billion in American energy purchases, and $600 billion in additional U.S. investments. These numbers are staggering. The 15% tariff everyone's focused on is higher than the pre-2024 levels, but it avoids an economic chaos both sides were staring at. Trump originally threatened 30%, then escalated to 50% tariffs. Europe just bought down the tariff rate with unprecedented investment commitments.
I think the president is right. We have a 50 to 50% chance to strike a deal. And indeed, it is about rebalancing. So you can call it fairness, you can call it rebalancing. We have a surplus, the United States has a deficit, and we have to rebalance it. We have an excellent trade relation. It's a huge volume of trade that we have together. So we will make it more sustainable.
Mr. Trump, can you do better than 15% tariff rate for the EU?
15% is the bottom number for these countries. But here's the strategic masterstroke most people missed. Certain sectors got complete exemptions from the tariffs. Aircraft and components, semiconductors equipment, and critical chemicals, and some agricultural products. These aren't random, they're strategic supply chains. While the media focused on tariff headlines, Trump secured something far more valuable. A guaranteed customer for American energy exports, massive European investment in U.S. infrastructure and defense, a framework that other countries are now desperate to replicate. The speed is shocking. Just months ago, we were staring at a potential trade warfare. European companies faced supply chain chaos. Markets were in panic mode. Now both sides have a predictable framework they can play around. This creates a completely new template for international relations. Instead of traditional diplomacy, Trump is using commercial diplomacy. Countries now can negotiate lower tariffs by making massive investment pledges. Japan already proved this works. $550 billion got them the same 15% rate.
If we are successful, I think it would be the biggest deal each of us has ever struck. So I'm very much looking forward.
Ever struck by anybody? That's true. Yeah. That's true. Right now we have that honor goes to Japan. We just struck a deal with Japan, as you know. And we're very close to a deal with China. We really sort of made a deal with China, but we'll see how that goes. And we have numerous other deals. And mostly I'm just going to charge tariffs. And, you know, there's not a deal per se, but people are going to pay tariffs. And we're doing them at the low end, not the high end, because we don't want to hurt anybody.
I think 15% is a respectable rate. especially if we have a trade deficit with them. The ripple effect is already starting. Treasury Secretary Bessent confirmed 75 plus countries are now bringing their best offers. Everyone wants to cut a deal before facing the full tariff threat. This is a new playbook for American economic dominance. What the media won't tell you, European leaders are publicly celebrating, but privately, they know the truth. This isn't a partnership, it's America collecting tribute from its largest trading partners. Europe just agreed to fund American energy independence. Steel and aluminum tariffs remain untouched. Pharmaceuticals are still on the negotiating table, but the framework is set. Massive investment in exchange for market access. This is how America rebuilt its economic empire, one deal at a time.
Those will be, could be, we'll do something, but basically pharmaceuticals won't be part of it because we have to have them built, made in the United States, and we want them made in the United States. And I think it's easy to say, and I think it's important to say pharmaceuticals are very special. We can't be in a position where where we're relying on other countries. Now, Europe is going to make pharmaceuticals, drugs, and everything else for us too, a lot, but we're going to have also our own.
It's a major national security risk, in my opinion, if we are not making our own medicine and pharmaceuticals in the United States. Right now, I believe like 90% or more of it comes from China, and that is not good. Now, don't forget, Ripple is partners with Ondo, and BlackRock has a BUIDL fund on Ondo Finance. The partnership is already there indirectly, regardless, however you want to look at it. And just in, the SEC Gov has granted accelerated approval for proposed rule changes from NASDAQ, CBOE, and New York Stock Exchange to allow in-kind creations and redemptions for BTC and ETH ETFs. That means market makers can deliver or receive actual crypto instead of cash. A big shift toward treating crypto ETFs like traditional commodity ETFs. The White House just proposed a strategic digital asset reserve. The focus, regulation, utility, and compliance. That's exactly where XRP shines. Fast, scalable, built for cross-border finance. This document is the green light for the real-world crypto use cases. Hyperscale data goes full throttle on XRP. Starting August 12th, they'll publish weekly XRP acquisition updates after hitting their 10 million goal. XRP may be locked up to 36 months. Expansion in sight pending liquidity approval. Hedera HBAR, XDC Network, and Quant have been chosen by Swift to join this year's CYBOS as discovered exhibitors. Seems Swift chose these tokens, which are all DLT, were chosen specifically for the event, signaling key institutional interest in these ecosystems. This is very good news. And last up, Ripple CTO David Schwartz just dropped a major hint. BlackRock and other financial giants could soon be using XRP Ledger for real-world asset tokenization. This could be speculation, and it's looking like BlackRock and Ripple might actually be happening. Institutional money is circling, and the XRPL is quietly becoming the infrastructure for tokenized finance. We're talking billions flowing through decentralized rails powered by XRP. While retail sleeps, the giants are getting in position. You think XRP at $3.14 is expensive? Wait till utility kicks in full throttle. That's when all the fun and games begin. That's what I have for you folks. Until next time, stay savvy, stay stacking, and I'll catch you in the next one. If you enjoyed this, smash that like button, hit subscribe, and comment down below. And if you want more crypto deep dives, check out our videos right here on Crypto Meets AI. Thank you for watching. Remember to always do your own research. This is not financial advice.